Selling cryptocurrency now is like selling Apple stock in 2001. What is going on, everybody? It is the Naughty Investor here, coming at you with another video. Thank you so much for tuning in to your daily dose of cryptocurrency news. Make sure you're subscribed to the channel so you're constantly updated, and hit that bell notification icon. Now let's get into it. So this article basically started off by saying, the cryptocurrency boom is like the dot-com bubble. And at first glance, a lot of people are like, oh, this is going to be an anti-crypto article, and, is this going to be a bad thing? But it's actually not if you dig a little bit deeper, because this is a similar thing to what I've been saying. Does overvaluation exist in the cryptocurrency market for particular projects? Yes. Similarly, with the dot-com bubble, there was overvaluation. However, when you look at what came out of the dot-com bubble, it's not as if the bubble pops and everything disappears. That's not what happens. What happens is the bubble pops, about 50% of things disappeared, and the other 50% went on to be huge. You got Amazon, you got eBay, you got so many large, insane investments, whereas if you put money in back then, you would be very wealthy right now. But that is what the article is trying to say. I'm going to get into it in a second, and then I will give my thoughts on it. So let's get into the article. London, cryptocurrency startups around the world have raised billions of dollars over the last 18 months to build software companies that they hope will rewrite the rules of everything from voting to stock trading. But even many cryptocurrency advocates expect the majority of projects to fail. 95% are going to end as nothing because that's startup funding. The CEO of eToro, a social trading platform that supports a range of cryptocurrencies, told Business Insider this week. His comments mirror those of Joseph Lubin, the co-founder of cryptocurrency Ethereum, who this week compared the crypto boom to the dot-com bubble of the late 1990s that ended in a spectacular bust in the early 2000s. Now, you have to remember, with that dot-com bubble, did a lot of things go bust? Were a lot of things overvaluation? Yes, but the things that weren't, the things that if you have the eye to spot value, and that's why I always teach on my channel, spot value, and I give tips and tricks on how to do that. I even have my ICO book, which I will link down below in the description. It's a $5 book. If you want to get it, great. If you don't, I don't care. That's completely fine. $5 ain't gonna break me. But just back to what I was saying, it's the ability to spot value. You're able to separate projects that are just hype from projects that have amazing potential. And if you're able to do that, and you could hodl through the bubble, and you could be smart where you're hodling and make decent trades and have good long-term investments, you could still be very successful in the cryptocurrency market. I know the bear market has been pretty bad lately, but nonetheless, I think the long-term potential of cryptocurrency is still there. But let's continue with the article. Lubin told a press conference at Money Conference in Dublin, if you look at the dot-com boom and bust, there were so many of the same issues back then. So much money invested, lots of money lost, lots of projects failing. Dominic Sheener, the creator of the cryptocurrency IOTA, told Business Insider earlier this year he expects less than 10 of the more than 1,400 crypto projects that have sprung up over the last 2 years to survive. And Danny Masters, a former JP Morgan trader turned crypto investor, told Business Insider that just 5% of projects are worth backing. All four are far from crypto skeptics, though. They believe that these projects that do survive will transform the world and make huge amounts of money for those who backed them early on. That scale that has never happened before. Huge amounts of capital have been invested into new cryptocurrency businesses over the last 18 months, largely through so-called ICOs or initial coin offerings. This is where startups issue their own cryptocurrencies, structured similarly to Bitcoin, in exchange for money to fund their projects. I am going to add in, not from the article, but just from my own perspective, that a lot of ICOs are based on Ethereum, although there have been some based on Neo and soon, Cardano, and a lot of different ICOs, and EOS is going to have ICOs as well. Over $9 billion has been raised through ICOs since the start of the year, according to Next. Asahi said, you have something that you've never had before, not even in the dot-com bubble. If you have a genius idea now and you put a white paper on it, and suddenly you have millionaires reading it and saying, that's a really good idea. If 1,000 put in 10,000, which is not a lot of money for those 100,000, you just raised $10 million for your ICO. That scale has never happened before. As with any investment, there are risks, high risk in the case of ICOs. That's what I always say. Investing in normal cryptocurrencies, I don't think are as risky as investing in ICOs, but I do think every good portfolio, you should be invested in a few ICOs if you know how to spot the good ones. The sector is largely unregulated around the world and has already grappled with fraud problems. Over time, many projects are likely to fail, just as the majority of VC-funded startups do. As good as an investment in the internet 10 years ago, still crypto enthusiasts expect the companies that do survive to create huge amounts of value thanks to what they see as the transformative potential of blockchain, the technology that underpins cryptocurrency. The CEO of Bitcoin exchange CoinFloor told Business Insider this week, if in 15 years only 1 in 10 or even 1 in 20 survive, then we're looking at dozens of potentially killer apps. Crypto bulls believe blockchain technology, a public immutable ledger that can be edited by multiple permissioned parties, has the potential to remake society by offering the promise of programmable assets. Imagine if your pound coin or stock certificate could be automatically transferred itself to another owner once the counterpart in a contract completes their side of the bargain. That is what we call smart contracts. I'm just adding that in there. Or imagine your medical records could be held in a public database that travels across borders with you as easily as a passport. Or picture photo ID embedded on the blockchain database and accessible only by you, potentially eradicating voter fraud. These are all projects floated by blockchain advocates. Lubin said this week, quote, "The technology is so profound. It's going to do so many amazing things for economic, social, and political systems worldwide. Investing in crypto now is as good as investment in the internet 10 years ago," he said, suggesting that blockchain could be as transformative as the internet has been. Tesla made 2,000%, Facebook 1,000%, Google 1,000%. This is the same thing, but earlier in the cycle. Lubin made a similar analogy at MoneyConf, comparing the cryptocurrency boom to the creative destruction of the dot-com bubble. While many projects failed, they paved the way for successful internet businesses that came after. Some, such as Google and Amazon, also rode out the dot-com boom and bust. Much of the success would have been hard to foresee in 2000. Who would have predicted that a search engine would end up pioneering self-driving cars and exploring new areas of medicine? Likewise, the exact typography of crypto future is hard to pinpoint, but it's the direction of travel that matters. My long-term view is selling crypto now is like selling Apple in 2001. I could not agree more. I don't necessarily agree per se with the numbers. I don't think only 5% of ICOs are going to succeed. I actually think it's a lot higher than that. I do admit a lot of projects are not going to succeed. A lot of cryptocurrencies will not succeed. But I would honestly, my prediction, I think about 50% of cryptocurrencies, of legitimate ones, not counting the scam coins, of legitimate cryptocurrencies that have at least over a few $1 million of market cap are going to succeed. That's kind of my opinion on things. I think about 40%, 50% at most. I don't think it's as bad as they're saying, but I agree with the sentiment of what they're saying, that many projects will fail, but the ones who don't are going to make you a millionaire. They're going to make you very wealthy because you are early in the cycle. And I completely agree. Selling crypto now is like selling Apple stock really early on. You might think during the dot-com bubble, oh, let me sell. You could be, I'm panic selling, but instead, if you hold through it and you hold for 10 years, now look at Apple stock. You would have made a 1,000% return, which really isn't bad. And I think with cryptocurrency, it is magnified. It's not going to be a 1,000% return. It's going to be a 10,000% return. That is my opinion on this topic. If you enjoyed the video, make sure you leave a like, subscribe, share it. What do you guys think? How many ICOs and how many cryptocurrencies are going to fail versus succeed? And how are you handling this bear market? Are you buying the dip? Are you buying more, hodling through it, or are you panic selling? Comment your thoughts down below. I want to hear them, and I will see you in the next video. Peace out.